Hello and welcome. Just after the government's second interim budget, we are now in conversation with DIPAM Secretary, Mr. Tuhin Kanta Pandey. So as always, thank you so much for giving time to CNBC-TV18. So the first off, a basic question that arises in our minds is the fact that from the receipts budget, probably it's the first time that the term disinvestment has been removed. What does this mean and why?
Well, plainly this means that there is no specific disinvestment target, and it's a non-debt receipt, and in the non-debt receipts you had three budget lines. One was the recovery of loans and advances, which remains, and the other one was what is called a disinvestment, and then the third was others, which was more like asset monetization, but it was classified as others. Now we have just recovery of loans and advances is one of the categories, and the second category is merged into one, which is the other receipts, and we have disinvestment subsumed into this, including asset monetization, etc.
So, sir, taking from there what you have just told, so asset monetization targets so far have not been extremely aggressive, so to speak, and correct me if I'm wrong, in terms of the budget line. Like last year, I think we had something like 10,000 odd crores in terms of road asset monetization, yes, if I'm not mistaken. So, so keeping that in mind, and probably that trend continues, then more or less the 50 or 1,000 crores that has been kept for FY25, I think more or less that would cover disinvestment, maybe 35 to 40 or 1,000 crores. I'm not trying to outguess you here, but broadly trying to understand the number.
Yeah, I mean, you have that 61,000 crore was 51 and 10, which
for
is for this year, and the RE is 30,000 crore, which possibly, we would be looking at 18 to 20,000 crore of disinvestment and 10 to 12,000 crore of asset monetization. And going forward, there's about 50,000, and work out will roughly the ratio in which we would be having sort of RE numbers.
Yeah. So again, picking up from there, so more or less maybe it could be a 50-50 breakup or something like that, roughly speaking.
Yes, actually,
very broadly speaking.
Specifically, the breakup is not really mentioned. And one of the reason important thing is to really see that, we would not be really chasing a target number, and it will be more based on opportunity. Because as we say that, what we really want to emphasize is the holistic nature of public asset management, which includes, for example, on the non-tax revenue side is the dividend issues. Then disinvestment is when you really part with a certain number of shares. So, and of course, we don't look at capex of CPSC directly into the budget, but there is some indication that more than 3 lakh crores are also contributed by the CPSCs into capex expenditure.
Why have the public sector banks been left out in terms of at least those banks where your government shareholding is pretty substantial, above 80%, above 90% in kind of they tapping the market to raise money along with the government?
Actually, they do.
Or you selling stake directly?
No, I mean, they will do.
Or would it be that, sir, that they are smaller banks, maybe not as strong as the big players? Would that be the reason? I mean, what is the reason why government has not acted on that front?
No, I mean, again, I would look at an opportunity. I mean, if you really look at it, the investments in PSBs, traditionally never had the kind of returns that the investors were making. They had a long periods of uncertainty in between, and the government had to step in and recapitalize.
But we are past that.
And we have passed that stage, and many of them were actually into the prompt corrective action framework. They are out of it, they are growing, credit is increasing, and that is also reflecting in this. So it's like, getting your mojo back. And I think one is that let it, continue, let that story continue. The second thing is, I think they are raising capital whenever they need.
81 bonds.
Yeah, they are raising the capital, and which is in a way diluting the stocks. And of course, the DFS is also looking into the issues is whether some stock sales in a calibrated manner may be possible. But that's something which a call which is to be taken in the overall scenario of disinvestment strategy, which we have actually tried to articulate, which is actually a value creating strategy first and foremost.
Just moving on to the privatization agenda, a lot has happened, or rather a lot has been done by the government over the last few years. But sir, in terms of the specific transactions that are already in the pipeline, like the BML, strategic stake sale, or Shipping Corp, could you give us an update where we are at the moment, and also, the potential bids that have already come in? I mean, the first stage of bids that are already in. I mean, are those investors still there in the market for these transactions to conclude? If you could give us some clarity on that front, sir.
I think all what I can say is that the ongoing transactions, they are ongoing. Many of them, the ones which you mentioned, had demerger issues. Also, the issues relating to NOCs from state governments, and seeing that the non-core assets which have been separated into the companies are properly separated in terms of their titles and so on in their documents into the for the new companies which have been created, the land asset companies. For the SCI, there is a process for allocation of shares and listing yet to be fully accomplished in case of SCI Lal, as also the fact that the Maharashtra government recently have cleared the stamp duty exemption for the demerged issues, and following those notifications, the necessary needful needs to be done. These are the kind of things which have actually delayed our, sort of inviting financial bids, while the bidders have already completed their due diligence.
So also moving on, just wanted to understand, and this is something that everybody is very curious about, what happens to the rest of the privatization agenda in terms of insurance companies, in terms of banks, with such a studded silence, so to say. The impression that we get is that probably, it may not happen, or it may be further delayed. Some broad thoughts on this, if possible.
I think I've articulated my thoughts. We have actually moved to a much more sort of, I would say, more nuanced, more clear, and the clearer.
Covering privatization
enunciation of a disinvestment strategy in the context of value maximization. So I think alluding to very specific transactions which we are doing, I think we have to set, I think in terms of our own thing is that we have got certain strategic sale transactions, there's certain minority stake sale transactions, and we are trying to put them into a context of value maximization. We are looking at in an integrated way how we look at it with that. And I think this one, to that extent, I think we should not be captives of a past thinking, but move forward into the new paradigm that we are talking.
Okay.
So it's not to say that the ongoing transactions are not on, they're going on. I've replied to you.
Right.
But what I'm saying is
Fair
that
enough.
it is even the disinvestment is not equal to these 4 or 5 transactions. Even the value maximization is a different story. So what we are saying is the context in which because you asked this question, why are you not having a specific disinvestment thing? And one of the reasons
why you took it off?
Yeah, one of the reason is that in several ways we have to look at it a disinvestment as an offshoot of one of the methods of deriving value. There are other ways of deriving value also. Now, to some extent, even the dividend and disinvestments are contradictory to each other. Once you get rid of your shares, you don't get dividend. It's the subsequent owner who gets the share. So therefore, we must be mindful of the fact that the money is the total money counts, and total return counts, and the total return is counting on many more factors than merely the disinvestment revenue that you used to show in that.
Right,
and
sir.
that is precisely the reasons why we have said that it should be a broader approach, and it should also not be very, it should not be also too much of impactful on the budget, particularly when, many of these are related to markets and market transactions, and they will be based on the opportunities that is created.
Right, sir. Just one last offshoot of this. So what I just wanted to understand was that this entire calibrated new paradigm, new approach to disinvestment program, that obviously also covers your privatization agenda.
Of course, the disinvestment includes both the sides of privatization as well as the minority stake sale.
Right, right. But in principle, whatever has been announced in terms of your policy, the broad framework, that we are sticking to it.
Yes, of course.
Except that the approach is going to be different now, from now onwards. Or rather, that is something that we've already been doing, trying to do in the last 1 odd year.
Exactly. I think what we are really looking at the outcomes now. So it's not really that, we are going to start and then start testing. It is actually, the shift is based on the outcome and experience that you have noticed. If you really look at it, and the value which we have created, it is these last 3 years I have been talking. It's not the forward-looking 3 years. What matters is that, we have to keep in mind that the wealth also continues to be there. That's kept in focus, the growth in wealth. Because ultimately the, commercial enterprises is for, improving wealth and income. The development, the growth is all about improving incomes, improving wealth. So we must also be mindful that this is a cycle which is there, and it is related to the stock markets.
Right, sir. So what happens if the markets, if the rallies don't happen, or they start plateauing out, or they start coming down, and there are further, geopolitical situations or some other exigencies, God forbid, then what happens, sir? Because then again that wealth creation gets balanced out.
No,
right?
no, it is not that. It is like, it is a part of the same thing, because it's like any economic cycle which will operate. It's like whether you are able to do that. I mean, it happens with you. If you have a house, or if you have other things, how you manage it. Obviously, you would not like to just dispose it. Possibly, if you are walking away from this world, you would probably dispose everything at one go, because there is no tomorrow for you.
Right.
But if there is a tomorrow, I think we always look for a sustained thing.
Hold on to some of it.
When we're talking of growth, you never say that you extract a 12% growth in a year with whatever you do, and the next year you fall into 4%. Nobody likes that kind of volatility. Always we say, to the extent possible, let's have a sustained growth.
So one question on, I know you've said no specifics, but just very broadly, can we expect IDBI Bank privatization to go through in the next financial year? Expect?
All I'm saying is that most of the ongoing transactions, we'll see that they are concluded towards this, because they are in the pipeline, wherever they are.
Right, right. So also on the Bharat ETF bond, is there a new move on that front? I just noticed that some you're looking at appointing legal advisors and all that. Is there a rethink or a rejig or some fresh tranche you're planning on that front?
No, that's not to do with the fresh tranche or otherwise. They have, the contracts had a certain thing, and we have to, while doing it, we have to fresh. It was for a certain number of years. So we have to, in order to do that, we have to go for again bid process and seek this thing. And as regards Bharat Bond ETF, it again depends upon the question of a demand, as well as also the suppliers, which are the CPSCs. We need at least 8 CPSCs to agree to a particular tenor of the bond, which is, again, it's a yield to maturity bond, so therefore everyone has to agree to the same tenor.
Correct.
So it's very important. And I know in between there have been certain changes in the tax system in respect of ETF, bond ETF, and that has impacted, of course, the demand, because the indexing has been removed. But that's a common issue across for all others, not particularly for Bharat Bond.